The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Hi everyone, Basil Chapman on this Monday, the 13th of December, getting close to mid-month. We've got 2 weeks worth of trading to go. It's going to be very interesting. And there are a couple of reasons why I say that, because if you look at the different indices, they're all telling us it's amazing. And what I did with my subscribers to my opening call over the weekend on Saturday, I had a very long, almost like a webinar, a video of my overview. The big surprise, let me just run the numbers here. The Dow's down 239 and 35,733, almost certainly going to make a peak A today in a very strong move. Technically, everything there is to say this should be a buy mode, and it should go to at least a B, a C, and a D. But a single leg A as strong as this, we haven't seen that in a long time. Is it the Chapman Wave single leg A failure mode? There are a lot of things going on here, so we're not getting too excited about this, other than to say the S&P went very close in the futures to an all-time high this morning, overnight, last night into this morning. But the S&P itself, 4743.83 was the all-time high on the 22nd of November. Drops sharply to 44.95, rallies back to a high of 40, I think it just touched 4713.57 on Friday. A red candle so far today, and I'm calling this gray B, and the stochastic is just under 80% at 79.31. Good enough to say it's very close to a buy mode, but I need to talk about a couple of things here, and I'll do that right away. Number one is we have seen throughout the last year and a half, probably I could go 2 years, but let's just say a year and a half, where we've seen stocks and indices that have made all-time highs or major recovery highs, pull back very sharply, and then within weeks, sometimes months, and sometimes years, they rally back and they go to exactly within pennies of that previous high, and then they pull back quite sharply. So that's one pattern that I'm saying is a technical aspect that you've got to be aware of. The other aspect, and now let me just go to the QQQ, is that we're looking at sectors that have been absolutely on fire for ages, leading on the way up, certainly also on the way down occasionally, but mostly on the way up. And then they take a digestive phase, and that digestive phase, like in the IBB, which was absolutely spectacular. I mean, here in the Boston area, it isn't even Kendall Square anymore, just outside Cambridge. It is part of Cambridge, I should say. It is other areas outside of Cambridge, like Watertown and Boston itself, that have become hubs for the biotech area. And yet look what happened after the spectacular move to 177.57 in the IBB NASDAQ biotech ETF, and it went just above the previous high. That was the high that was made, was it February? Yeah, February at 174. It goes to 177 months later and then pulls back very sharply. And within that context, what I'm trying to show you is that there are patterns where certain sectors that have been absolutely leaders can take a time, not necessarily so much price, but a time out that uses up and usurps energy both up and down, while it just meanders, making lower highs and lower lows, not major lows, but certainly not rallying anymore. Okay, got that out the way. So the QQQ trading right now down $1.24 at 396. Got hung up right here, and let me just draw this in because part of the Chapman Wave methodology. Green, press new parallel, change that color to pink, drag it down to about a 16th or just over 16th below there. And there you are. You got the Chapman wave inside track repellent zone working on the on the QQQ for the past 3 sessions. So that says that a move above the high of last week of 400.20, a close above 401 into the 401 area would be a big positive shorter term. Any slide has to hold at 396. Any slide has to hold 393, 392 support. But this is the thing that I was talking about with subscribers on Saturday. Look, this is called the S&P Select Tech Spider Fund, the XLK, all-time high as we speak at 175.18, up 30 cents. Hit 175.41 a little earlier on. That is incredible. Look how it broke out of the Chapman wave falling axe formation and it's done a one-to-one to almost a one. Yeah, but it's a one-to-one to the upside. This is a leg. I'm calling this in the weekly chart F, but actually the way it looks right now, it's an F/B because the MACD is good, stochastic's good, over 81%. The on-balance volume is pretty good. It's pulled back some from the overbought condition. The 9 is way above the 14, and the price is way above the 9. The monthly chart is in leg D. This looks really good. All I can say is this is incredible. What a market we're looking at. Such a mix, a diverse set of sectors. Amazing. All right. With that said, what we're looking at is, to continue our analysis, what we're looking at is the IWM, the Russell 2000, can't get out of its own way. It's got the dreaded H pattern. It's under the 200-period moving average. It's down 2.35 at 217.55. It's down over 1%. And that weekly chart said that spike to the upside we spoke about. Leg D should pull back into and go to the lower part of the rectangle formation. So how it tests the 213 to 211 area over the next week or two is going to be absolutely imperative to monitor, because if it slides sharply back to 210 or lower, that is a big negative for the market as well as the IWM. All right, gold. Gold is acting a little bit better. It's up 3 at 1787. Nothing to see here, folks, but look at the 9-period moving average. It's trying to rally above the 14. It hasn't yet, but look at the MACD. The 9-period differential is starting to improve. The histogram's improving, and it says there is a chance that with the Fed, everything is focused on the Fed this week, coming up to Wednesday and Thursday. This could be an inflationary spike that we see in gold if something happens, something is said, something is done. I think not too much is going to be done, a lot's going to be said, and it triggers an inflationary aspect in gold, and gold suddenly spikes above 1806. That will say gold is going to have a pretty decent move as Bitcoin continues to meander and lag as it's out of favor. Is this another one of those sectors that had a spectacular move and now it's just plain old running out of steam, and it has to reformulate before it can have another big spike to the upside? I think yes. Silver is trading. We're still trading up today. Oh, it's up a little bit. That's nice. It's up 17 cents at 22.37. Really needs to get to 23s to say, hey, I'm out of the woods. I'm going higher. At this point, it's meandering. I'll be back in a moment. Dow's down 218. S&P's down 60. I'll be right back.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today, and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
All right, folks, we're back. Down to 218. Now, a couple of emails have come in, and quite a few actually. I sent out my my daily report. It was the opening call newsletter. And for some reason, when I use a template, and I grab the template and then I put it onto Monday, and I put it onto Tuesday. And now that becomes a new template. So Monday, by tomorrow, my Monday template will be ready for Tuesday. For some reason, the work that I had done a little earlier this morning didn't show up correctly when I cut and pasted. And I also thought that I had not done something else, which was I had a question about a stop on a particular issue that we had the other day, and I checked it out and I asked the subscribers, and that stop, as I understand it, did not get taken out pre-market, and I try to be as fair as possible. I know some people don't get pre-market orders in, but I try to get it as close to whatever's happening as possible so that there is no question about we're in or we're out. There's not maybe yes, maybe. In this particular instance, I was following it. Someone got stopped out a penny higher than the stop. I don't think that stop was taken out. And I did something else this morning. I said, if you were stopped out at the price, that's only at the price, not anything else, at the price that was stated on Thursday, then you can go back into the same stock. And I want you to put it, but it has to be a little bit less than you had before because you have been stopped out, but use the same stop as we had before. So in this particular instance, and I looked at it and something happened. I didn't even get the number incorrectly. Missed number 12. It skipped to number 13. I did have number 12 in, but the number itself was missing. I thought, I better do it over. Maybe I got something wrong, and I copied the same darn thing, and I sent it out as a correction. But the correction was no correction whatsoever. So that's how it stands. Nothing actually changed. Everything's there. Then the other thing is that on number 1, I have repeated exactly what I said before. Start a long under a certain number, and that number's way down. And the questions have come in, wow, that's like 500 points down. Yes, I want to do that only because if it gets to that level, it'll be shorter term oversold, and we should have a pretty decent bounce. And that's the only reason why. So nothing should be confusing other than the fact that I actually sent out the same darn thing twice. That was very silly. I don't know why I did that. I just misread it. Okay. Now, the next thing I want to do is, I want to show you the dollar is holding very nicely. Now, for those of you who are technicians based on the Chapman wave methodology, look, if that's a part of your vernacular, I'm raising this falling axe formation. Look, it fits perfectly. I don't want to put another line in. Just keep the line. I try to keep it. I know it doesn't sound like it, but I do try to keep things as simple as possible. That means that's the new resistance line on the dollar inside track repellent zone. And if the dollar somehow trades at 96.60 or higher, it's at 96.26 in the next 2 days. That'll be a really nice breakout, and says, now we've got the chance of a double top with just a fractional high to make your leg D in the weekly chart. But if you're looking at the dollar on a weekly basis, look at this beautiful, beautiful cup that's formed. I love this pattern. If you remember, we've seen this so many times. I've spoken about it before. Back in 2000, I think it was, the XAU made this beautiful long-term monthly turnaround in a kind of a flat bowl formation, and then when it broke, and I think it was in the 44s or something. So I'm not saying the dollar's going to do that. I'm just saying I love this pattern because what it does is it gives you a chance to say, if it continues in the cup formation and doesn't break sideways for too long, but continues higher, it could go, in this case, it could go quite a bit higher, but I wouldn't get too carried away. I think the 97 to 98 area, if it even gets there in the next 4 or 5 weeks, will be spectacular action in the dollar. In the meantime, I'm just saying we remain long from 90, and we're just going to hold this. I think the dollar is going to be moving up, and then it's going to be forming probably a rectangle formation. Pops over it and then comes back inside. So this is the area that I think the dollar will be in for a little while. I'll give you numbers right now. The base will be 95.52, let's go to the 95.50s, and the resistance will be in the 96.50s to maybe 60s. All right, that's the way I'm looking at it. EUR USD, look at this, going nowhere. It's just in this arch formation, really struggling. It has gotten back into the weekly falling. Here we go. You see this declining trend line into this Chapman wave inside track propellant zone, which is now acting as a repellent zone because it can't break back up into it since it broke down. And it just says the euro at 1.128 really needs to, I'm not going to give it just a bounce, it needs to close above the high of the 8th of December of 1.13547, and the USD JPY, the yen, has the exact opposite. It's making a cup formation. It's holding well. It failed at this alternate count. This is CDEF. Yeah, there's an alternate count. This is really strange, but the pattern itself says that it's looking like more like a head and shoulders pattern. But if it can break at 113.48.8 up 0.009, if the yen is able to close above 114.3, that'll be absolutely fabulous action, but it's got a lot of resistance in the low 114s. All right, now we're going to do the high-grade copper at the beginning of the week. We want to be as thorough as possible. Just stuck in the bottom of the range. Wood, this is the iShares Global Timber and Forestry ETF. Did have a bounce, but it too stuck in kind of a rectangle formation. It's down 83 cents at 88.35. And the final thing, not the final thing, almost the final thing, the TLT is trying to rally up $1.62, meaning yields are coming down a little bit at 150.48. I suspect that when all things are done, it's going to be the TLT, but the bonds themselves. What are the bonds trading at right now? Bonds are trading up 28-30 seconds at 162 and 630 seconds. I suspect it's going to be the bonds that tells the story of the Fed, and that the Fed might actually be following bonds at some point. But most importantly, they're in a range right now. Yields are just stuck in a range. Should I do that? Yes, I'll do it right now. TNX.X. Look, you can see it made a peak D in the weekly chart. This is the 10-year Treasury note, the TNX, and it is making an arch formation. It's stuck in the low range. It's pulling back a little bit. It's at 14.39, down 0.50. In other words, it's at 1.439. I just think it's in this range. If at any point into January we start seeing 17.30, 1.73, wow, that's going to shake the market up quite a bit. I'll be back in a moment. Dow's down 282.
Are you having fun trading the markets but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
I'm looking back down to 323. This is, and S&P is now down 31. This is very interesting because that single leg A up in the Dow has been a little worried. Yeah, we're going to go to Mark in Fort Collins. Mark, how are you?
Good, Basil. How are you?
I'm good.
I've been keeping one eye on ARQQ. I was thinking it might hold the 20 level, but it's not. What do you have any thoughts on that? I haven't bought any, but I'm looking at it.
So there are three things that we're looking at with ARQQ. ARKit, Quantum encryption technology, platform as a service, making communication links secure against attacks. At this particular time, with all the stuff you're reading about with attacks everywhere and they're increasing exponentially, you would think that all these stocks, I know that PANW, is that, yeah. Why is it all squashed there? Yes, this is Palo Alto. Has a nice move today. It's up 3 at 535. But you would expect that this whole cybersecurity area would just be on fire. But in fact, it's not working out that way. And that to me is a little confusing. So let's go back. So number one is, as a sector, if this is really part of, I'm not sure if that's exact designation, but I'm putting it into that area since it has encryption technology, into the security area. That sector is really not doing as well as you would expect, number one. Number two, this is an IPO. It just was moribund from the time it came out. It did nothing. I'm not sure why, if they just borrowed the symbol or whatever it is, but it didn't do anything. April of this year, it comes out, it has a low of 960, it has a high of 1017, and it just stays in that range for ages. And then out of the blue, it plummets down to $8 in September, but it has a high of 41.52. I would say 8 to 41 is not a bad incremental move, a 400-fold move. But then what happens is it pulls back to the weekly 14-period moving average, and it uses that as a springboard together with the 9-period moving average to rally. And then all of a sudden it does this retest, the very thing I was talking about with the Dow and the SPY, look, 41.52 was the high back in September. It plummets to round number 13, and that was back in, I think it was October. And then it has a very steady move, peak A, peak B, peak C, peak D. D's where you've got to be careful, pulls back sharply, then goes peak A, peak B, peak C, and the D gets close to the 41.52, pulls back in the daily chart, and then on the 3rd of December, it runs to where? 41.86. That is 34 cents higher than it was months before. And then what does it do? It takes a dive. So number one is it was an IPO and it was in an area that should be part of the security, and it didn't do, it hasn't held very well. Number two is, as a chart formation, it went back to almost to the penny of the left side high. And at that particular point, the MACD was good, but lower than it was previously back in September. The stochastic was flattening out and had already started to turn down under 80%. The on-balance volume had already made its high and pulled back. So the technicals were not quite confirming, only the 9-period moving average over the 14 was. And the third thing is the pattern that I talk about, the double top, the one that I call the drop bucket pattern, where it's like the inverted dreaded H, has produced a move that comes down. And now it looks like the U-shaped pattern could make a second U, because it's starting to fail dramatically with only one green bar. Even that was down. Out of the last 6 sessions, there have been 5 red candles, well, including today. So I think that 16.17 200-period moving average may be just a little bit above it, because it held it a little bit above before with a doji high on the 13-round number low in October. That probably is going to be a test. But market-wise, there's a fourth component that I have to put in here. And I have to say that it could be one of those situations where you get your pinch hitter who's kind of a novice, and you put them in play, and that day they just turn out to do a fantastic thing. But that's it for the whole season. That's the best they do. And then the rest of the season, they're just sitting on the bench. They can't do anything else. And it seems to me I have to put that into that category. It now needs to prove. It was an IPO. Now it needs to prove itself. So I would say you can put it on your list, but a lot needs to happen for it to have sustainability, not a bounce, but sustainability to go back to the 41s. It's trading at 19. It's been cut in more than a half. So it's got that pattern that I call the A pattern, the Eiffel Tower, straight up, straight down. It's even come down sharper than it went up. I'm just going to say, be real careful as a trade. If it gets to the 1880 level, starts to form a little bit of a base, and then it can have a little springboard bounce. It could get to the 50-period moving average, which it's just ignored so far. It's had 3 days and it's broken below it, and that's at 23. That would be a nice percentage move. But I'm just thinking, in this market, I would not be going for speculation in something that's proved itself to be very, very volatile. With only, if you had to draw a midpoint line right across, you'd say that it's only traded above, say, 27.50. What was the high right there? 27.90. Let's call it 28. It's only closed above 28 a handful of times in each one of its big moves to the 41s, but most of the trading's been below it. So that's a long way of saying I'd be a little careful. Keep it on your list, maybe for January sometime, but at this particular point, I'd even be a little hesitant to play anything but a quick bounce.
Okay.
I don't know if that helps you, but that's the way I'm looking at it.
Yeah, that's good stuff. I was hesitant, so I'm glad I talked to you. So that's good.
Okay, well, thank you very much for calling. Let's keep it on it together. So, folks, there's a couple of things that I wanted to talk about here. So some questions came up. Let me see how I can deal with those questions as well. So something about the IWM. In the sector rotation, I do not like it when I see leadership thinning out, and then the very obvious thing is that the sectors don't participate. If we're moving up together, but one sector was much stronger, I'd say that's okay. But when you're getting this diversion between the IWM down in the 217 level after being 30 points higher at 244 back in November, when you're looking at the XLK at an all-time high, the selectivity here, if you're looking at Apple trading, no, don't say that it's down. Wait a minute. Let me refresh. I'm going to refresh, folks. Yep, Apple's down. Made a new all-time high of 182.13, but it just couldn't take the strain. It needed an hour or two to breathe. It's down 28 cents. It's 179. So this kind of selectivity says to me that we're looking at a rotation that says on the way up, you're getting new highs with fewer and fewer and fewer participants. There's a point where I suspect the new high list is going to get somewhat extended. And when that comes down, there's a chance that we see a unified pullback. I'll be back in a moment.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
So let me just, a quick question in Tiger YouTube. We're looking at the EM, the emerging markets. Remember, I drew this in. I said there's a down channel here. Down channel can last a lot longer than your patience, like a rectangle sideways move, making lower highs and lower lows. I just be careful. It's at 48. If it gets into Chapman wave inside track, propellant zone and can't hold that, that becomes a repellent zone, and that's in the 47s. So just keep an eye on that. Then I had a question basically saying, it's me again, I'm looking at Pfizer long-term. Can you do an analysis? And absolutely, I think right now is a good time to be looking at Pfizer. It's part of the helping with the whole COVID, the variants, etc. PFE, and this is Pfizer trading at, PFE is trading at 55.10, up 2.33, up 4%, 4.5%. It's almost, look, it's going to test its left side high. We've seen this many times. That was peak D on the 29th of November at 55.70. Today's high is 55.51. Pennies away from that. I found that I couldn't put a down arrow in this. Over the years, is a modification. Maybe over the week, I won't do it on Technical Friday. I'll keep talking about it over the week. When the MACD pulls back sharply with a stochastic, but the 9-period moving average holds so strongly above the 14, even if the price goes underneath the 14, lately I've been trying to hold off putting a down arrow until the retest of the highs. And then you can see whether there's going to be a peak E and a failure pattern, or it's going to break out. And then I have to say, okay, that's really a good turnaround within the context of a buy mode without failing. That's the daily chart. The weekly chart, there's absolutely nothing wrong. Everything here, it's a flat stochastic at 88%. I love that. And is this new A or old E? And will the next high be F/B? It doesn't really matter because we're using the daily chart. I don't want to do the technicals right now because I don't want to run out of time. The big question is, I'm back to discuss Pfizer. I'm long from about 35 and it's trading right now at 55, 20 points high. Bravo. Wonderful, wonderful, wonderful. And let's see. And hold this in an IRA. My price target is at least 89. If I put it on a monthly chart and going back to April 1999, this has a huge cup pattern. I'm talking about 1999. Question came in, were you around for the dot-com bubble? I was around for every minute of that dot-com. I've spoken about it plenty of times. Yes, yes, yes. This is not the same as the dot-com bubble. There are aspects that are very much the same, but the enthusiasm of the public this is like nothing compared to what happened there. If I put on a monthly chart going back to 99, has a huge cup pattern that has recently broken out of on a big volume, with a low of 11 and a high of 50 April 1999. I'm looking for measured move to at least 89. Please analyze using your methodology and discuss today if possible. As always, thank you for all you do for all of us. Alan. So, Alan, let me do this. Squeeze, squeeze, squeeze. Here we go. This is not for you. This is for the chart. Nothing personal. Squeeze, 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 squeeze. So 47.44 back in 99 made a double top, the exact pattern that we've been talking about in many of the charts. Look at this. It made the cup pattern and stalled at 47.44. And what was the high right here in July of 2000? 46.69. Less than $1 away from the 99 high. This is the pattern I'm afraid we're in right now, that there's a chance we're going to make a double top and then have a pullback in January, maybe. I'm just not sure just yet because so many charts are looking very similar to this. So, yes, it did break out. And talking about let me draw this in. Talking about a huge cup pattern, I have to go to peak D. And now we can go up. All right, I'll figure it out because this line right here, the Chapman wave inside wedge target resistance line, is what's going to really tell me where the long-term, oh, look at that. Oh, I can't believe it just hit it. No, it hasn't hit it. Oh, it's still got 60 to go. Okay, I'll do more of this in my own time, and then I'll talk about it a little later on. But I'm talking about what you're talking about, and that there is a measured move in Pfizer. But I would say that I'm being a little conservative at first. I would use this pattern here, the breakout from the high on the left side lip to the base right here, takes you to a little higher than my eye. I'm doing it by eye. Let me just do that again over there. Normally I do it very conservatively. I go to there, and I'm going to stick to my conservative way of looking at it. My measured move, my initial measured move for Pfizer is to what? Right there. Okay, is to 54.81, and we're at 55.14. If we close above it in December or maybe even in January, I can then extend this measured move from the high, the double top high, to the base, and that will take me somewhere. I usually go just step by step. The next move up would be 58.30, and if I do a full measured move, I don't even know if I've got room. Yes, I do. It takes me to 63. So let's just go one step at a time in this Pfizer move to the upside. I love what's going on. It's a beautiful stock. Merck should have seen something like this, but Merck is not. Look how it went into the rectangle formation. It's earlier in the stage of the double top area. 88.31 was the high back in December of 2020, and the last move was to 91.49 within 3 points. I mean, isn't this amazing how it works? Right. So, yes, I agree with you as an IRA, sitting there, just not even looking at it, but maybe adding periodically. Alan, I think that is a great move. But be prepared that if at some point in the next 3, 4, 5 weeks, there is a big market pullback, Pfizer that's where you want the test to come. How does it hold up under all these conditions? Does it become the participant as the safety measure, as we've seen in something like a General Mills? Also, look at this double top. Makes an all-time high. General Mills, a different area altogether, but this is called the defensive area, not defense like Raytheon, but defensive. Makes a high of 64.65 back in May of this year. And what is it trading at right now? 65. At a high of 65.07 today. These double tops are incredible. They are worth respecting and watching. So a question came in, are you saying that Bitcoin is kind of done? No, what I'm saying is that from my perspective, Bitcoin was the trading, and remember, we are still long from, it's a trading at 47,270. We're still long from the 12,000s based on the GBTC Bitcoin fund. and we've taken a lot of profits off. We've just got a tiny little position as a core position, and I'm happy with that. We'll add to it at some point. But this looks like at 47,330, it wants to get close towards the low that was made, 41,000 back in September. I'm saying probably the 45,000 area is going to be the big test. No, it's going to be back, but at this point it is taking a well-earned breather with the same kind of double top that we were looking at.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Are you looking for a secured investment which pays you on a monthly basis? The Tiger First Mortgage Program may be the program for you. The best rate on a 5-year CD in the country right now, according to Bankrate.com, is paying 1% per year or $1,000 per $100,000 invested. The Tiger First Mortgage Program pays 7% per year, paid monthly, on secured, high-value, buildable properties in St. Petersburg, Florida. The investment is for 4 years, paying 7% per year or $7,000 per $100,000 invested. Your investment is secured by high-value real estate in St. Petersburg, Florida. Your investment can be anywhere from $100,000 to $500,000. Do you want to make $1,000 per year on $100,000 invested or $7,000 per year on a secured Tiger First mortgage? The Tiger First Mortgage Program may be just the program for you. The Tiger First Mortgage Program pays 7% per year, paid monthly. For more information, you can call 877-518-9190. That's 877-518-9190.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi, folks, we're back. So just the 3 things I wanted to write down. Number 1 is Tesla making lower highs and lower lows. I think it is done. Talk about timeout. This is going to take a timeout, and I think this timeout is going to be price and time for Tesla. That's what I'm thinking right now. It made 1243.49 all-time high back on the, whatever that was, back in early November. It had a 1217 round number low. Remember we talked about that? And then also had a 1208 round number low the following session. Oh, was that the high? Yeah. And now what we're looking at is that I think it's the way the pattern is forming, both in the daily and the weekly, is suggesting that peak E with a long-legged doji in the monthly chart is going to be there for a little while. In other words, the high that was made will not be taken out very, very soon. That's number 1. Number 2 is SMHs. I want to do a little bit of that as we go into the break before we wrap up today. Down 3.35 and 3 or 4.15. I think that we're looking at the semiconductors struggling here, even though you've got leadership. And I went through this on Saturday. I went through maybe 8 different semiconductor stocks. But the leadership can't just take it by itself. It really needs, someone saying in the den, in YouTube, the generals, when the generals are the last to fall. Well, in this particular case, it's not quite the generals. In fact, we've had leadership in the mix of all the different indices holding up quite well. And in this case, the semiconductors, I would call that the lead general, and it hasn't made a new high yet, above 318.82. Watch this closely. And the third thing is we've got to keep an eye on the yields. I don't know if the Fed can do anything other than say we're going to stick to our plan, but it's the way the market interprets whatever they say. The reality is that when I look at the RPH, this is tomorrow if I remember, the RPH, that retail was 20% of Amazon. Look, it failed to break above its recent high in the XRP. Thank you. Got a great program coming up. Got